So gold is really more so something that will keep you rich. It's not something that will make you rich. Even if you look at the whole history of this stock, I mean, you go all the way back to the 90s. If you bought this stock and held it to the 90s, since the 90s, you actually lost money. Look at that, you lost 10%. So I'm not one to say like go put everything in gold. I mean, it's very tempting to believe that, but that's not it. Gold is more so something to own that in a way where it's going to do well if the world goes bad. Like, so for example, you look at this, right? Let's compare this to something like Meta. Meta, that's one of my favorite companies. I just love the innovation behind Meta, the energy behind Meta. I'm a big holder of Meta. Look at this. Last 5 years, you've made about 200%. Your money's doubled in the last 5 years. If you were an early investor in Meta, not even early, like 2013, you could have bought the stock for $25. Now it's trading at 697 bucks. That's like buying a house for $250,000, and now the house is worth almost $7 million. Like that's literally how much growth you got here. And so if you were consistently buying Meta on a regular basis, since you saw Zuckerberg go in that hoodie and take the company public, you'd be rich. You'd get rich off of Meta. You could have gotten rich off of Starbucks. You could have gotten rich off Apple. You could have gotten rich off a lot of companies, right? So I want you to find those companies that are going to make you rich by being consistent as an investor. Okay. All right. So there we go. So that's our conversation on gold. That I'm sticking to it. Okay. What are your thoughts on OSCR? Okay. So like I said, we'll do about maybe four stocks, and we've already done like, let's consider that to be one. So I'll do four, and then after that we'll save them for next time. But let's see here. OSCR is OSCR. OSCR. Oscar Health. Okay. Oscar Health is a health insurance company that serves its customers through a tech platform. Okay. All right. So Oscar Health is, I'll pull it up on the screen so we can do some live interaction with this OSCR. Okay. All right. So let's look at Oscar Health, and I'll tell you what I see just based on the history in terms of what you're dealing with this company. Okay. In the first place, I'm not sure. It's a $3.8 billion company, so pretty substantial. Not the biggest out there, but not bad. Year to date, it's gone up about 8%. 1 year, it's down. 5 years, it's down. So this is kind of a fallen angel. This stock looks like it has a lot of risk attached to it. If there's a reason to believe it's undervalued, that might be worth it. If there's a reason why you like this company in particular, that might be worth looking at. I don't see anything here that makes the stock special enough to just make it a must-have for the portfolio. Let's see, they offer individual and family, small group and Medicare Advantage plans, technology platforms to others within the provider and payer space. I'd be curious to know how they're using things like artificial intelligence in their company. But I don't see anything here that makes me say, yes, I really want this stock. I would probably, if you're looking into healthcare, I would literally consider like a healthcare ETF. That way you're not guessing. There's an iShares Dow Jones US Healthcare ETF. That ticker symbol is IYH. IYH. This gives you ownership. The top companies in IYH are Eli Lilly, Johnson& Johnson, United Health, AbbVie. I guess that's not Abbott Labs. Abbott Labs is one of them. Merck, Intuitive Surgical, Amgen, Thermo Fisher, Boston Scientific. I would probably consider something like that if you're looking to get into the healthcare space. But healthcare really hasn't done that well. This is really, I mean, it's done okay. It's interesting.